In this video, I'll talk about the latest warning from institutional investors and big players for cryptos and Dogecoin. Let's start with the first one from institutions. As per CoinShares' latest digital asset fund Flow's weekly report, crypto-based integral investment products are witnessing massive outflows of capital. In the last 7 days, net withdrawals exceeded $141 million. The Purpose ETF witnessed whopping 150 million outflows. And this is the second largest weekly outflow in 2022. Basically, the total assets under management are now at $38 billion, their lowest point since July 2021. And as per its latest price action, Bitcoin is in a downward correction as the Fibonacci tool indicates a possible decline in Bitcoin. Basically, Bitcoin will decline even more if it loses the $28,000 support. The previous retracement suggests that Bitcoin will continue to fall to the 1.272 Fibonacci extension, or 23K if it goes below $28,000. Also, at the current price levels, the 14-day relative strength index is tracking at around 40.5, which is close to its ceiling at 41.63. Recent bullish momentum will be tested as we approach this level, with bears likely to begin re-entering the market. We're talking about Bitcoin because of its incredibly high price correlation with Dogecoin right now. Coming back to it, after the recent crash, equity research analyst and investment strategist Alden said that Bitcoin falling to the mid-20K range would represent super deep value for investors. She argued that Bitcoin's recent price fall below 30K represents a buying opportunity for investors that are able to capitalize long-term. She argued that Bitcoin at a mid-20K price point offered substantial value according to a number of metrics. She also said that, when you look at things like dormancy flow, a bunch of different on-chain indicators are kind of deep value. After this, the Delta blockchain fund founder Kavita Gupta said that we are seeing one of the biggest dips in the crypto market in a long time as the prices have slashed down from all-time highs. In addition to this, she also warned that the crypto market is currently experiencing a correction from its crazy speculative highs and looks like it's going to stay. And then there was the veteran business journalist Stuart Varney, who also warned about the volatility of the crypto market sticking around for the next 3 to 6 months further. With that being said, the next Bitcoin halving event is expected to take place around 2 years from now, and it could have a huge positive impact on its price. It'll be its 4th halving event. If you don't know, a halving event is the protocol-designed 50% reduction in block rewards for miners, and it happens every 210,000 blocks, or around every 4 years. The previous halving event took place on May 11, 2020, when the previous award for each Bitcoin block created was halved to 6.25 Bitcoin. The 4th halving event, predicted to happen on May 4, 2024, will reduce this award even further to 3.125 bitcoins per block. About this, crypto analyst Dennis Parker shared on his Twitter profile a rainbow price chart that shows the past performance of Bitcoin. This chart provides potential insight into Bitcoin's long-term price movement. The color bands follow a logarithmic regression but do not represent any scientific basis. The chart shows the changes in Bitcoin price over time, which had increased after each previous halving event. About this, Plan B said that the original 2019 55K stock-to-flow model seems to fit better than a later 100K update. Interestingly, a refit based on an 18 million average stock-to-flow ratio and 3 years of new data confirmed the original model. The bad news is that the model still points to 500K after 2024 halving. Now if we look at the Bitcoin chart, it has formed a symmetrical triangle, which currently holds a tight range from 28.9K to 30.9K. This pattern has been holding for nearly 2 weeks and could potentially extend for another 2 weeks before the price makes a more decisive movement. For those unfamiliar with technical analysis, a symmetrical triangle can be either bullish or bearish. In that sense, the price converges in a series of lower peaks and higher lows. The decisive moment is the support or resistance breakthrough when the market finally decides on a new trend. So we'll just have to wait to see how it plays out. Coming back to crypto critics, the ECB chief came out recently to say some very mean things about the crypto market. She said that, "I'm concerned about those people who think it's going to be a reward, who have no understanding of the risks, who will lose it all, and who will be terribly disappointed, which is why I believe that crypto should be regulated." And then right around this time, the Central Bank of India also issued a scary warning. The governor of RBI said that the investors were warned well in advance about the volatility of the crypto market, and those who don't care about the warning have lost money now. Further, the governor had also given a hint about the interest rate hikes in the future monetary policy meeting of June. She said, "We have been cautioning against crypto, and look at what has happened to the crypto market now. Had we been regulating it already, then people would have raised questions about what happened to regulations." Also, Nirmala Sitharaman, the Indian finance minister, has also recently made a strong case for regulating cryptos at a global level to reduce the risks such as money laundering and terror financing. Basically, all of this suggests that we could see crypto regulation coming into effect this year in Europe and India, and this could have major repercussions for the entire market. Moving on, another negative comment came from the IMF chief. So IMF chief Kristalina Georgieva cautioned against confusing crypto products with currencies and said anything not backed by a sovereign guarantee can be an asset class but not a currency. She also said that crypto products may be offering faster services at a much lower cost and better inclusivity, but for that also there was a need to separate apples from bananas, and regulation would be key there. She then said, "My impression is that the people are losing trust in crypto also, and that loss of trust is more than that in central banks. So as I've been saying, we need to be prepared for what's to come. Crypto regulation is going to be followed by a massive sell-off in the market. In any case, there's some really good news that came out today as well, and I'm sure that it'll help offset some of the outflows that we'll see very soon." Let's start with Asia. So Sumitomo Mitsui Trust, which is one of the largest asset managers in Asia, will start offering digital asset services to institutional clients this year. The newly created firm will hold cryptos and NFT for large investors and corporations. Sumitomo Mitsui Trust believes theft in the crypto space is a common barrier to institutional investors who tend to entrust well-established financial institutions instead of personally holding such a type of asset. I think this is going to bring in a lot of funds from institutional investors, and I can't wait to see how it plays out. Talking about institutions, Grayscale Investments is requesting everyone to send a message to the US SEC to approve their ETF listing. The message comes in the form of an ad with a QR code which, when scanned, will lead users to a message board where they can vote for its approval. I suggest that you put in a vote too, because if accepted, this ETF is going to bring hundreds of millions of institutional funds into the crypto market. Now coming back to the ECB, they recently published a report on financial institutions. In this report, they said that more financial institutions engaging with crypto or digital assets being used as a form of payment could increase spillover to the wider economy. Given the speed of crypto developments and the increasing risks, it is important to bring crypto assets into the regulatory perimeter and under supervision as a matter of urgency. So that's another proof that crypto regulation is well on its way, and we need to be prepared. Now coming back to Dogecoin, in a recent tweet, Doge founder said that the reason why people think crypto is 95% scams and garbage and most crypto people are assholes is that crypto is 95% scams and garbage and most crypto people are assholes. And to this tweet, Elon replied with a laughing emoji. It's interesting how the big players in the market have so little respect for most of the altcoins and meme coins, and they still choose to publicly support Dogecoin. And another important data for Doge is that Dogecoin has returned to become one of the most actively purchased assets by BSC whales. Into the Block data suggested that Dogecoin whales have been on their toes in the previous 24 hours, with a 24% increase in large transactions. Large transaction spikes are frequently associated with increased activity from institutional players or whales who are either buying or selling. These transactions exceed $100,000 in value. Also, the profitability of Dogecoin has now risen to 53%, after declining below 50% earlier in the month. Having profitability of more than 50% suggests that the token is still relatively more stable than its counterparts. And this is why I'm still very optimistic about where we're headed from here in the long term.